Welcome, everyone, to the Investing in Real Estate show. We are heading into a smoking hot market in the next few months. We are starting to see some increasing data showing us that rates are coming down. Jerome Powell next week, of course, is going to be testifying, and what we will hear from the Fed chief could change everything in the spring. If you're a Fed watcher, you know that we are going to see rate cuts 100%. 100%. We are going to see, I should say the chances of rate cuts are 100%. We're not going to see a 100% reduction, but we will see rate cuts. Absolutely 100%. That is coming. The question is, will it happen in March? Will it happen in May? Nevertheless, I've been saying here on this show that we are heading in for a smoking hot real estate spring, which means prices are going to go up. We have such pent-up demand right now for real estate in the United States that people have been sitting back and waiting on selling their homes because they're like, I've got a 4% interest rate now. I don't want to go to a 5.5% interest, so let's just not sell our home just yet. So now, once that shifts a little bit, and of course those interest rates drop a little bit, and spring is the best time to list a home. It's the best time to buy a home in the spring because there's, inventory hits the market. People are getting ready for the end of the school year. They want to move houses before the next school year starts. So May, April, holy smokes, we are about to see a smoking hot real estate market, in my opinion. Now, a lot could change. Suddenly, Jerome Powell could come out and say, you know what, instead of cutting rates, I'm going to increase rates, which no one believes that's going to happen at all. And we could see this recession hitting at the beginning of the year. Now, this is like holdover, sort of residual consumer spending, consumer confidence numbers, of course, higher energy costs and things like that. So we could see that recession hitting in the first quarter of 2024. However, the housing explosion is going to happen, I believe, in March, April, May, June. So get ready, folks. Like if you've been sitting on the sidelines and thinking about getting started investing, you have slightly higher interest rates right now, but I'm telling you what, prices are about to go up. Okay, so if you like paying higher prices, then just wait or start really thinking about making some of those investments now before we start getting into this bidding war process and all of that come the spring and the summer. I think things are going to go crazy. I tell you. Anyway, I hope you guys are doing good on this Monday and gearing up for the holidays. I'm really excited about it. Going to take a little time off, a little downtime, do some skiing and spend some time with the family, watch some football and kind of kick back, read some books, play some games, and just kind of relax a little bit. Let the mind wander and take some hikes with the dog and all of that. So it's such a great time of year to recharge. And my birthday is New Year's Eve, so I'm going to try to do some skiing on my birthday. Anyway, let's dive into your Q&As today, right? We've got some questions that you have leveled at us by going to our website, morrisinvest.com. And right there on the right side of your screen, you'll see a microphone icon. Just click that. Leave us a 30-second voicemail question, and we are happy to try to answer it here on the show. I should also mention, if you're interested in actually buying full-service real estate, rental real estate, brand new construction, just click that book a call button that's on our screen right there on the website, and you can book a 30-minute call with our team. It's totally free, and we'll get you started in that process, learn about your finances, learn about your 401ks, your IRAs, and help you navigate how to start investing in real estate. That's what our team does. But first, I want to tell you about our friends at Lear Capital, because Natalie and I are big investors in precious metals. Yes, we invest in real estate, but a big portion of our portfolio are in precious metals, gold and silver, because of what's happening to the US dollar. It's no secret, if you're tuned in, then you need to know that experts are predicting a big recession headed our way. One economist just said, this is the beginning of the end for the US dollar. So if your savings accounts are tied to the US dollar, look out, folks. Please protect yourselves. And we are devaluing the US dollar faster than ever before. And last year was terrible for most investors, but 2023, 2024 could even be worse unless you're smart and you have a portion of your assets in precious metals, other hard assets like gold, silver, and real estate. And that way you can protect your financial future as these other investments start to collapse all around other people. So if you want to invest in gold, our friends at Lear Capital can get you set up and start purchasing precious metals right now, or even converting part of your IRA or your 401k into a gold and silver IRA. It's very, very simple to do. And you can call them. They love talking to people on the phone, so you can see if it's a fit for you. Give them a call today at 1-800-450-1008. There's the number on your screen. We've also set up a special website just for you as well. You can get your free gold and silver investor guide by going to learmorris.com. That's LEARMORRIS.com. And right now, if you call and work with them, they'll get you set up with $15,000 in free bonus metals. That's right, $15,000 in free bonus metals with a qualified purchase. Again, call their 800 number today, 1-800-450-1008. And you can buy gold bars, gold coins sent right to your home, silver coins, silver bars sent right to your home, or held in storage off-site. They will talk you through that entire process. Again, give them a call today, 1-800-450-1008. Okay, our first question today comes to us from Craig, I believe.
Hi, my name's Craig Calkins. I have a question about, I have a directed IRA account that I purchase properties with, and then I also have a non-IRA account that I purchase properties with, and so I'm using funds everywhere I can get them. The question is, can my directed IRA account loan my non-IRA LLC funds? Let's just say they loan them at 5%, in which case then I can take advantage of the tax deductions with non-IRA real estate. Please let me know. Thank you.
Oh, thank you so much, Craig. Wouldn't that be amazing if we could lend to ourselves using our self-directed accounts? Unfortunately, the IRS rules are very explicit about that. That would be a disqualified person. Okay. Again, the self-directed IRA is fantastic, but there are some restrictions. You cannot lend to yourself. You cannot lend to a relative. You can't just lend it to your sister. It has to be someone who's, not affiliated with your family. So if it's someone you met on the internet or a friend, you could lend to them. But if they're a family member, no, you cannot. And you cannot lend to your LLC because you are a member of your LLC. Your name is on your LLC. So that in turn is lending to yourself. However, there is a 60-day rollover rule loophole, which you may want to look into. That is if you plan to basically, loan to yourself for a short period of time with the idea of rolling it over to another account, meaning you would be closing your self-directed IRA, you're rolling it over to another account. So you can, I would definitely dive into that rule. It is a loophole. People use it, but I wouldn't, you definitely want to check and see if you are compliant. I don't believe that this would be the situation for you because you're going to keep that self-directed account open. So again, if you had an IRA that you were going to close and you're going to roll it over to another account, that's a situation where you could be lending it to yourself temporarily, but then you'd have to be paying it back within that 60-day window. Again, and these things change within the IRS code, so I would absolutely check on that to be sure. But I'm going to flat out say probably not. You're not going to be doing this, Craig. You're going to have to find out other creative ways to do this. You cannot borrow from yourself from a self-directed account. You cannot get a loan from yourself to, think about it like this. You'd be borrowing from your self-directed account to buy your primary residence. Right? Like I want to buy this house and I want to live in it with my family. Oh, I've got a self-directed IRA. I'll just take out a loan and I'll lend it to myself at 3 or 4% competitive interest rate. You can't do that. So thank you for the question though, Craig. But make sure you're above board on all of that. All right, our next question.
This is Jorge from West Hills, California. I have a rental property inside an IRA LLC. I'm over 59 and a half and would like to take in-kind distributions in 5 pieces. First, can I do that? If so, How can I do this? Would like to pay taxes in 20% increments instead of 100% in one chunk. Thanks in advance for your advice.
Okay, thanks, Jorge. Yeah, I would absolutely talk to your tax advisor on that. I'm not going to give you tax advice on how to break it out. I would talk to your tax advisor on what are the implications of taking out those distributions based on what you have coming in from income right now. For instance, just as an example, I'm was deciding whether or not to sell off some old stocks that I had, right? And I was going to actually take a capital loss on those. But then I want to make sure that I'm doing it correctly with my tax advisor so that I'm offsetting the capital gains. And you can do it within certain calendar years. So definitely talk to your tax advisor, okay? Make sure that you've got a tax advisor who understands real estate investing and understands this piece of it. Because do you want to take all of those profits now if you've also had great capital gains in this calendar year to offset it? Great. Maybe you want to distribute it and spread it out over a couple of years so that you can stagger it. And that's what I've definitely done in the past with profits and, of course, losses. I want to be able to spread those out and talk with your tax advisor on how to do that. So, yes, there are ways, obviously, with the distribution and to just be crafty about how you're doing it so you're not getting hit with an enormous amount of taxes right now. But I would definitely talk to your tax advisor on that, okay? Because I don't know what your capital gains look like in this calendar year to give you some sort of advice on that. And I also don't know what your losses are in a particular calendar year. So these things you can carry over to next year's. You can carry over losses, you can carry over gains. And you can play that game with your tax advisor, with the IRS, and make sure you're doing it all above board and legally. Okay, that's the most important part. Okay, thanks, Jorge. I hope that helps. But definitely talk to your tax advisor about it. Yeah, you don't have to do it all at one time. That's an important question. You can be breaking it out in different pieces and increments. Our next question from Eloy.
Hey, Clayton. I love the channel. Hey, really quick. I'd love to buy some property rentals, but I can't get in. I tried RAD. I couldn't go anywhere with them. And then I tried the Invest Connect, I think it's called. My credit's not that great. And even though I've got the money to invest, they're saying I can't get a loan for anything else. So, but anyway, that was it.
Okay, Eli, so I'm a little confused here. So we partnered with a team. So, okay, let me just lay this out here. To buy an investment property like through Morris Invest, one of our new construction properties, the minimum down payment is going to be like $50,000 to $60,000. Okay, so you're going to have to come to the table with about $50,000 to $60,000, and then we have financing. We work with over 200 banks to finance the rest of it, right? But a lot of people don't have $50,000 to $60,000 sitting in cash, right? Maybe they have it in an IRA. We can work with them on that. So, but if you don't have that, maybe you've got $5,000, you've got a few $1,000s sitting there. You want to start investing in real estate, but you can't make a down payment on a new construction property. Last year, we partnered with Connect Invest, and we built something special where you could invest in real estate as a fund, but not own like a full property outright, but you'd be investing at really fantastic returns. I mean, talking like 9, 10, 11% returns. And you can invest for as little as $500. One of our team members right here on Morris Invest, she's so thrilled. Her and her husband invested in Connect Invest, and they put a few $1,000s in it. She says the amount of interest we've already made in this calendar year has allowed us to reinvest and go to the next level. And so that's the power of compound interest using something like Connect Invest. So again, I'm a little unclear as to why you wouldn't be able to take advantage of that. The whole idea is that if your credit is not fully established yet or not as great and you don't have a lot of money, you can invest for as little as $500. So I would just revisit that because that doesn't sound right to me at all. Just go to our website, go to morrisinvest.com/connect, okay? And on that page, you'll see information about how to team up with our friends at Connect Invest. They will, and because we've partnered with them, we set up a special program specifically for Morris Invest listeners, okay? And which will allow you to get in for as little as $500 and start that process. So I would just recommend checking it out on our website. And it's a great way for your nest egg to grow, right? So if you've got, okay, I don't have enough for a full down payment yet, I've got $10,000, great. put that into Connect Invest, allow that interest rate to grow at 9% interest and you can choose your increments, 12 months, 24 months, and then reinvest it into the next round if you want. And then pretty soon you're going to have enough for a down payment. That's the beauty of doing it this way. So anyway, I would check it out. Go to morrisinvest.com/connect to learn more about that. But something sounds fishy there, Eloy. I think I don't know. I would definitely talk to that team because you should be able to easily start investing in real estate using that strategy. Let us know your thoughts on that. And also, we'd love to have a voicemail question from you. Go to our website, morrisinvest.com, click on the microphone icon on the right side of your screen, leave us a 30-second voicemail, and we will try to answer it here on the show. Thank you guys. As we near the Christmas holiday, we hope you guys are having a great time wherever you are, staying warm, staying safe. And again, I think we're heading for a real estate explosion here in the next few months. So be prepared. You're going to hear talk on the news about recession in the first part of the year after Christmas, right? Those temporary jobs are laid off and so forth. But I'm telling you what's going to happen to real estate, okay? Just pay attention, guys. Don't be distracted by the CNBC headlines. Pay attention to what we're talking about here. We have access to the data that they aren't paying attention to. All right, guys, go out there, take action, become a real estate investor. I believe it's the number one way to build wealth. We'll see you next time, everyone.